These lecture tabs for Chapter 1 include chapter overview, learning objectives, and lecture notes. There's nothing much here under comments for now. Now, these lecture notes are actually the publisher/author's lecture notes with some observations, some modifications, some emphases that I've made to them. So I modify them somewhat to emphasize certain things to make it easier for you to hopefully learn the concept, especially for this chapter 1. So as you'll see, I have actually done some bolding. I've also colored certain things. I've added some other notes to their notes, and I've done other things. And you'll see as I go through, I will be emphasizing those changes. So you can come here, read about it, but now you can always complement your reading with my own sort of review of these same notes. So to begin with, for chapter 1, as you know, this is the introduction for your accounting classes. This is the gateway for all of your accounting work in the future. So this chapter begins by discussing some project called the Pathways Vision Model. And as you can see, I have not bolded that. I don't think it's extremely important. You can read about it and move on. You should learn about the differences between financial and managerial accounting. Just so you know, financial at Foothill includes accounting 1A and 1B together. That is financial accounting, at least the introduction to financial accounting. And then accounting 1C is managerial accounting. So that would be the follow-on to your class right now. In terms of the actual content going forward for chapter 1, the text also talks about what is accounting information. It doesn't give you too much info on this, so I added some information down here. So I'll come to this in a bit. It also discusses the users. Now I call them stakeholders. That's a more generic and more general term. And so that really refers to who actually cares about these basically financial statements that you'll see or you talk about or you learn about later in the chapter, the reports that come out of accounting. And so you can see that, here they are listed. Under these lecture notes here, there will be more detail. I'll go down to that in a bit. There's also a discussion on the organizations that are involved in accounting rules setting, the standard setters. So the main ones really are the FASB, the Financial Accounting Standards Board, who receives its authority to create accounting rules for the U.S. From the SEC, Securities and Exchange Commission. So those together are the ones that really manage and create and authorize the development of the rules. The rules are referred to as GAAP, generally accepted accounting principles, and you can learn more about it in your textbook. There's also a similar entity, but this is for international accounting, and this is the IASB. And their rules are referred to as International Financial Reporting Standards, or IFRS. The book also talks a little bit about the forms, so the chapter that talks about the forms of business. There's proprietorships, which means one owner, partnerships, which is two or more owners, corporations, which could be one or any number of owners, and something relatively new, like limited liability companies. And again, the book discusses this a little more in detail in other chapters. There's also a discussion about the Sarbanes-Oxley Act, referred to as SOX, and these are some laws that came about after all the scandals, the accounting scandals of the early 2000s. So if you hear about SOX, it refers to basically laws that now govern how accounting information and reporting is done. With respect to the next couple of items here, I think these are quite important for you to memorize very well. It will come back over and over again, and so you need to really sort of clearly understand each part of this. Financial accounting is basically a process that records and then puts together that information, that because it's all kinds of different transactions that occur, and you as an accountant would actually summarize or sort of put together all those transactions into some systematic uh, format that then ends up being reported to the stakeholders that we talked about up here. Now, the reports themselves are actually referred to as financial statements. And so there are 4 of these statements: the balance sheet, the income statement, the cash flow statement. And so they actually, each of these have a certain purpose. And again, if you go to the lecture notes later here, you will see a little more detail as to what these are individually. You have to be very good at defining each of these, or at least discussing the purpose for each of these financial statements. Now, that's the definition basically. Is again, the financial accounting is the process of recording, summarizing, and reporting financial information. Now, what is the objective? Now, the book doesn't really go into this, but this is quite important. I think you should, again, memorize this part because we'll come back in the future. The objective: why do we have financial accounting? Now, the one way to talk about it is actually also referred to as financial reporting. It's the same thing. So the objective of financial reporting or financial accounting is to provide information that is useful for making business and economic decisions. So as you can imagine, if there were no set rules, then anybody could come up with their own ways to come up with reports. And so that would be somewhat messy, and people could not constantly and consistently rely on those reports, or even make comparisons between companies, or make comparisons between periods for the same company. So as you can imagine, the objective for the field of accounting is quite important for the economy in general and business in general. Now, as you get into the next section of the chapter, then it gets into a little more detail. Now, this is sort of one of the laws you will be learning in accounting. It will always constantly go back to something, so an equation. We call it the accounting equation, which is assets always equals liabilities plus equity. So you need to simply, just for now, memorize this equation. Later, you will sort of deconstruct what these terms mean, and then what goes into them. That's the whole purpose of the first 4 chapters, and that's the overview here. Now, in terms of learning objectives, as you probably have seen already from your chapter, we'll be talking about those topics that I just sort of overviewed previously in this tab, but they sort of list them this way. Now, the reason this is important is because the book itself, the textbook, is organized always by learning objectives. So you need to sort of understand that the first few pages of the chapter deal with this learning objective number 1. The following few pages in that chapter, go along with learning objective number 2, and so on. So that's how both the content of the chapter and also the homework is organized. In terms of the actual lecture notes, again, this is a little more detail to the overview that I just went over. So I'm just going to focus on certain things here because I don't have I don't want to make this video way too long. Again, in terms of stakeholders, in the U.S. at least, the main stakeholder, in reality, that's how the the rules of GAAP basically were developed for the decision making that is done by investors. Obviously, there are other stakeholders that are actually also interested in that information, but mainly we are serving investors for the most part. To a lesser extent, we're serving creditors and then also other stakeholders like the IRS or the FTB, other taxing authorities, the government basically. In terms of careers, notice that I have actually turned this into orange color because I wanted to highlight the CPA, Certified Public Accountant. That's sort of the top designation for an accountant. You take a very extensive exam after a lot of study, and then you work for a couple of years, and then you get a license from the state, and you are able to do some very specialized work. There are other designations. You can see here bolded, but the most important one I think is a CPA. But all of these have a lot of value, so you should go into more detail if you wish. We can talk more about that, I guess, in the discussions if you wish. Learning object number 2, here what I wanted to sort of emphasize is you need to also make sure you understand the differences between these forms of business. As I said before, there's a certain difference as it relates to the number of owners for each of these. So proprietorships is 1, partnerships 2 or more, corporations could be any number, and limited liability companies also has a different purpose. The other area that is such important with respect to forms of businesses is taxation. As you see later in a different chapter, sole proprietors and partnerships are taxed only once on their profits, whereas corporations are actually double taxed. Then they'll say, well, then there's a reason why you are actually being taxed twice here. Well, that's because corporations are given special protection. Shareholders or owners of the corporation cannot lose. Let's assume that they're sued and the award in the suit is much more than the actual business itself. Well, if they were a proprietorship or a partnership, the winners of the lawsuit can actually go against the personal assets of the owners here, but they cannot do so under the corporation designation of the corporation form of business. So that gives a lot of protection for the owners, which is the reason why you want to become a corporation at some point. You want to protect your assets, your personal assets. Well, for that privilege, and in essence, you are double taxed. So that's kind of a drawback. So it's a give and take in a sense. Now, the LLC is a special form of business which allows you to have only single taxation as well as limited liability, similar to a corporation. So that's the reason this is in there. There are also other concepts you need to define and learn what they are. The cost principle, and that's in your book. You only assign the cost of, say, a purchase based on what you actually pay for it. And so you can learn more in more detail what this means. You can also do some Google search on what this is, so you can get more info in excess of what you read in your textbook. There's also something called going concern. Read that in your book, and monetary unit assumption. Then if you go down to LO3, learning object number 3, you will see that you've got, again, further detail on the accounting equation. Again, assets equals liabilities plus equity. Now, to really start to understand how accounting works, this is absolutely essential. You must be able to define what these are and understand what these are. They are all different. There's a reason why they are what they are. Resources, these are actually, think of it as loans, debt. So assets are purchased either by borrowing money, the company borrows money to buy assets to operate. That's a very basic way of thinking of it. Or it could go and get more owners to contribute to the business as owners, they have actually also have ownership now in the company, so they can actually contribute more cash to also fund operations. So that's sort of in a nutshell what these things are, but there's a lot more to that than that. So please do review the textbook and other sources that you may find. There's also how the changes in each of these accounts are reflected in the accounting equation. So you can keep that in mind. To do that work and to understand how the transactions that become reports at the end get processed, you do need to very methodically think through each of these types of transactions. This is just a very few, but at least it gets you going with respect to how you process these these transactions and how they affect each of these types of elements in the accounting equation. So start that process, and we'll talk more about this later in the week. You will see later that it's assets equals liabilities plus equity. Now the equity part is really broken up into 4 separate sort of activities. So learn what these are as well. Notice that here, this portion of the equity, revenues and expenses, are actually coming from the income statement. So whatever the results come, whatever results come out of the income statement could be expanded and basically just put into this part of the accounting equation. It's kind of confusing at the moment, but later you'll see that it will make sense. Now, if you get down to the last part of this, so kind of most of what, yeah, that is the last part of what I'll be covering in this review. LO5 talks about the financial statements themselves. That's the objective, right? That's the end result, the reports. And there are 4 of them, as I said before. There's the income statement, the statement of owner's equity, the balance sheet, and the statement of cash flows. We will not really do much with the statement of cash flows yet. We will do that more in a later class. We'll still do a little bit of it in this class, but most of our work will be in these 3 here: the income statement, the statement of owner's equity, and the balance sheet. Okay, and so you should actually really take a look at these notes that relate to each of those financial statements. They are quite important. I cannot overemphasize this part. You need to learn the definitions for all these concepts, all these elements, and all these financial reports, as well as some of the additional notes that refer to each of these. So go ahead and read the book first. Come back to these notes in the module, and then use the discussion boards within the week 1 module, and also use MAL to learn these things. Okay, enjoy.